What's happening, crypto champions? Get ready for a lightning-fast download of the most explosive updates hitting the digital asset world. We're talking about a market moving at warp speed, and if you're not plugged in, you're missing out. Today, we've got massive shifts in corporate treasuries, and the number of public companies adding Bitcoin to their books has absolutely exploded, nearly doubling in just 6 months. We're seeing everything from tech giants to traditional financial players diving in headfirst. What does this mean for the future of digital assets on the balance sheet? We've got the scoop. Next up, prepare for a market debut that's turning heads. A major firm with significant ties to the Trump family has just made its grand entrance onto the Nasdaq, and the initial trading activity was nothing short of spectacular, with its value rocketing right out of the gate. This isn't just another listing. It's a high-profile entry into the public markets that has everyone talking. We'll break down the details of this incredible debut and what it signifies for its future trajectory. Then, we're shifting gears to Europe for a fascinating financial innovation. A German company is set to unveil a groundbreaking Bitcoin bond, a move that could redefine how traditional investors access digital assets. We'll be looking at the specifics of this new bond and what it means for the intersection of regulated finance and cryptocurrency. Get the details you need to understand this developing story. Finally, we're diving into the fast-paced world of memecoins with a look at a Solana-based platform that's been making waves, but not always for the right reasons. From facing regulatory warnings to lawsuits and feature suspensions, this platform has seen its share of drama. We'll explore the latest developments and what they mean for its users and the broader Memecoin ecosystem. Don't go anywhere, hit that subscribe button and ring the notification bell so you never miss an update. Corporate crypto holdings skyrocket. The corporate world is embracing Bitcoin like never before, with the number of publicly traded companies holding Bitcoin on their balance sheets surging past 150. This represents a dramatic increase, nearly doubling in just the past 6 months, signaling a major acceleration in mainstream adoption. 6 months ago, the data showed around 80 firms with Bitcoin reserves, but this latest figure demonstrates a powerful momentum shift, with 4S and P500 giants now among the adopters. This expansion into the financial mainstream is undeniable, showcasing a growing acceptance of digital assets as a legitimate treasury reserve. The diversity of these adopting companies is striking, spanning across various sectors. Technology titans like Block and Rumble are on the list, alongside established financial institutions such as BlackRock, Intesa Sanpaolo, and Virtu Financial. Beyond these prominent names, the trend extends to a wide array of industries. Cryptocurrency-native firms, including industry leaders like Coinbase, Galaxy Digital, and CoinShares, are not only participating, but also actively growing their Bitcoin reserves. Furthermore, companies in the energy sector, healthcare, and even retail giants like GameStop and Tesla have made significant moves to incorporate Bitcoin into their financial strategies. This broad adoption across different business landscapes underscores Bitcoin's evolving role beyond a niche digital currency. A substantial portion of these corporate adopters are companies deeply involved in Bitcoin's infrastructure. Mining companies, such as Marathon Digital, Hive, and Bitfarms, are consistently expanding their Bitcoin positions, reflecting their confidence in the network's future. Service providers like Bitcoin Well and Fold are also prominently featured, indicating a deepening integration of Bitcoin into the operational fabric of various businesses. This widespread embrace by infrastructure providers further solidifies the ecosystem's growth and resilience. The data also reveals that public corporations have collectively amassed over 844,822 BTC, a staggering amount valued at more than $100.5 billion, marking a historic milestone. This accumulation is more than double the amount acquired by Bitcoin exchange-traded funds, ETFs, in the first half of the year, highlighting the significant appetite from the corporate sector. Publicly traded companies have dramatically increased their Bitcoin holdings from $7.2 billion to $20 billion over the past year, marking a near 200% rise. This trend is not just about holding Bitcoin. It reflects a growing recognition of Bitcoin as a potential store of value and a hedge against economic uncertainties. Analysts suggest that this rapid adoption is driven by a combination of institutional confidence in Bitcoin's long-term prospects and a strategic diversification of corporate assets. As adoption continues to accelerate at this unprecedented pace, the focus shifts from if more companies will join to how many major corporations will enter the Bitcoin arena in the coming year. The market is buzzing with discussions about this institutional surge, with many seeing it as a validation of Bitcoin's potential as a global reserve asset. The increasing number of companies, especially those with significant market capitalization, adding Bitcoin to their balance sheets is seen as a major catalyst for future price appreciation and broader acceptance. But this isn't the only massive financial story unfolding. Hold on to your hats as we shift gears to a different kind of market debut that's shaking things up on Wall Street. Trump family firm blazes Nasdaq trail. A cryptocurrency firm with deep ties to the Trump family has made a spectacular debut on the Nasdaq stock exchange, instantly capturing the market's attention and delivering massive returns for early investors. American Bitcoin Corp, co-founded by Eric Trump and Donald Trump Jr., began trading under the ticker ABTC following its merger with Griffin Digital Mining, and its initial performance was nothing short of phenomenal. The company's stock price surged an astonishing 102% on its first day of trading, reaching an intraday high of $14 before closing the day at $8.04. This impressive opening performance immediately underscored the significant interest surrounding the venture. Eric Trump's personal stake in the firm, reported to be 7.5%, was valued at an estimated $548 million following the listing, showcasing the substantial financial implications of this public debut. This event is particularly noteworthy given the broader context of digital asset companies seeking to establish a presence in traditional financial markets. The successful integration of American Bitcoin Corp into the Nasdaq signifies a growing intersection between established political figures and the burgeoning cryptocurrency industry. American Bitcoin Corp operates on a hybrid strategy that combines direct Bitcoin mining operations with a treasury asset approach. The company has already accumulated a substantial portfolio of over 2,400 BTC, which, at current market prices, is valued at approximately $269 million. This dual approach allows the company to generate revenue through mining while also benefiting from the potential appreciation of its Bitcoin holdings. This model positions them as a significant player in both the operational and investment aspects of the cryptocurrency space. The firm's strategy reflects a broader trend among crypto-focused companies to diversify their business models and leverage their digital asset holdings. Earlier in the week, the Trump family's financial influence was further highlighted by the trading debut of WLFI, a token associated with their DeFi project, World Liberty Financial, which reportedly added $5 billion to their wealth. This series of financial maneuvers indicates a strategic expansion of the Trump family's involvement in the digital asset and decentralized finance sectors. The market reaction to American Bitcoin Corp's IPO has been overwhelmingly positive, with many analysts viewing it as a significant endorsement for crypto-related companies seeking public market validation. The involvement of high-profile individuals like the Trump sons adds a unique dimension, potentially attracting a broader range of investors beyond the typical crypto enthusiast. Discussions are rife about the implications of such high-profile entries for the regulatory landscape and mainstream acceptance of cryptocurrencies. While a major U.S. firm makes waves on Nasdaq, a different kind of financial innovation is brewing across the Atlantic, potentially opening new doors for traditional investors. German Bitcoin bond arrives. A groundbreaking financial instrument is set to emerge from Germany, as NAKIKI SE announces the upcoming launch of its German Bitcoin bond. This innovative product aims to bridge the gap between traditional fixed-income investments and the volatile world of digital assets, offering a new avenue for investors seeking exposure to Bitcoin within a regulated framework. Details of this pioneering bond are scheduled to be presented at a virtual roundtable event on September 8, 2025. This event is expected to draw significant attention from financial professionals, regulators, and investors interested in understanding the mechanics and implications of such a novel offering. The announcement, transmitted by EQS News, highlights the formal steps being taken to introduce this product to the market. The issuer, NAKIKI SE, is solely responsible for the content of this announcement, underscoring the importance of due diligence for potential investors. This German Bitcoin bond represents a significant development in the European financial landscape, potentially setting a precedent for similar instruments in other jurisdictions. The bond's structure is anticipated to provide a more conservative approach to Bitcoin investment compared to direct ownership or highly speculative vehicles, appealing to a broader range of risk appetites. The creation of a Bitcoin bond by a German entity is particularly noteworthy. Germany has a robust financial regulatory system, and the introduction of such a product suggests a level of regulatory comfort or a clear pathway for compliance. This could pave the way for other European nations to explore similar financial innovations. The bond is expected to offer fixed-income characteristics, providing investors with regular coupon payments, while also linking its performance to the price of Bitcoin. The precise mechanism for this linkage, whether through a derivative, direct holding, or other financial engineering, will be a key focus of the upcoming presentation. Such a bond could potentially offer a way for institutional investors, pension funds, and even retail investors to gain indirect exposure to Bitcoin's potential upside without the complexities of direct custody or the risks associated with highly volatile altcoins. NAKIKI SE's move signals a growing trend of established financial players seeking to integrate digital assets into their product offerings, responding to increasing investor demand. Market analysts are closely watching this development, viewing it as a crucial test case for the viability of crypto-linked bonds in regulated markets. The success of the German Bitcoin bond could encourage further innovation in structured products and traditional finance's engagement with digital assets. The presentation on September 8th will be critical in determining the bond's appeal and its potential impact on the broader adoption of Bitcoin as an asset class. From groundbreaking bonds to the wild west of memecoins, our next story dives into a platform that's been making headlines for all the wrong reasons. Pump.fun faces scrutiny amidst Memecoin frenzy. The vibrant and often chaotic world of Solana-based memecoins is under the spotlight, with the popular launchpad platform Pump.fun facing a barrage of issues ranging from regulatory warnings to significant legal challenges and operational disruptions. This platform, which has facilitated the rapid creation and trading of countless memecoins, is now grappling with the consequences of its explosive growth and the nature of the assets it hosts. Pump.fun, known for its role in the surge of Solana's memecoin market, has recently experienced a sharp decline in both protocol fees and trading volume. This downturn follows a series of controversies that have put the platform and its operations under intense scrutiny. Adding to its woes, the platform is now facing a class action lawsuit that accuses it of issuing unregistered securities and generating nearly $500 million in fees. This legal challenge strikes at the core of its business model, questioning the regulatory compliance of the tokens launched through its services. Furthermore, in response to reports of harmful content and user misconduct during live streams, Pump.fun temporarily suspended its live streaming feature. This decision aimed to curb problematic behavior, but also impacted user engagement and revenue. The platform has since reintroduced live streaming, reportedly with enhanced moderation practices, in an effort to balance user experience with safety and compliance. The platform's operational challenges have not deterred its activity entirely. Despite the controversies, Pump.fun has managed to execute some of the fastest initial coin offerings, ICOs, in the history of the crypto market, showcasing its ability to generate rapid interest and liquidity for new memecoin projects. However, its rapid expansion has also attracted the attention of regulatory bodies. The UK's Financial Conduct Authority, FCA, issued a warning, leading Pump.fun to block access for users in the United Kingdom. This move highlights the increasing regulatory pressure on platforms operating in the decentralized finance and Memecoin space. Rumors have also been circulating about a potential $1 billion token sale at a $4 billion valuation, though the team has yet to confirm these ambitious plans publicly. The platform's reliance on facilitating Memecoin launches, which are inherently speculative and often lack fundamental utility, places it in a precarious position as regulators worldwide sharpen their focus on consumer protection in the digital asset market. The community reaction to these events has been mixed. While some users appreciate the ease and speed with which they can launch or invest in Memecoins on Pump.fun, others express concerns about the platform's regulatory compliance, security, and the potential for scams. The ongoing legal battles and regulatory pressures are likely to shape the future trajectory of Pump.fun and potentially influence the broader Memecoin ecosystem on Solana and beyond. The platform's ability to navigate these challenges will be critical to its long-term survival and success. And that's a wrap on today's top stories. But before you go, let's do a quick rundown of the headlines you need to remember. We've seen public companies surge into Bitcoin, hitting over 150 firms holding the digital asset. A Trump-backed crypto firm made a massive splash with a 100% gain on its Nasdaq debut. Germany is introducing a new Bitcoin bond, potentially changing how investors access crypto. And the popular Memecoin platform Pump.fun is facing lawsuits and regulatory hurdles. Don't miss out on any of these fast-moving stories. Make sure to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell, drop a comment below with your thoughts, and follow us on all our social channels.